A number of retailers reporting earlier this morning. Courtney Reagan's here. She's got a breakdown of those results. And Courtney, this is stuff that is even more interesting than normal because there's so much happening at this point.
There is, and there are so many nuances, Becky. Let's just give you a brief rundown. Abercrombie shares are tanking after reporting a surprise loss, but on stronger than anticipated revenues. It is lowering its full year revenue forecast, though, due to negative drags from FX, China's COVID lockdowns, and inflation-related impacts on consumer demand. Inventory at 45%, shares down 22%. Petco shares are higher on stronger earnings, stronger revenues, and comp sales. It's reaffirming its full year forecast and says that the pet category continues to surge, shares higher by 4%. And like Walmart and Target, Best Buy missing on earnings but beating on revenues. Its first earnings miss in more than 5 years. Comparable sales fell 8%, but that's actually better than expected, and on top of a 37% comp growth rate on the same quarter last year. Now, Best Buy is lowering its full year forecast. CEO Corey Berry says it expected the pressures when it guided in March, but the impact of the cost pressures have increased since that initial forecast. Unlike Target and Walmart, Best Buy shares are higher in reaction. They've lost some traction, but up about 2%. It was dragged down last week, you can see here on the chart, when Target and Walmart reported. But now it seems investors have the benefit of time and perhaps understanding some more of the nuances that weren't as clear initially last week when we heard from those other big box players.
Hey, Court, I think the thing that's so weird about this is the consumer is changing. The consumer patterns are changing so rapidly. I mean, for many of these retailers, it all happened in the month of April. Maybe it was cold weather. Maybe it's a huge shift and things aren't coming back. And I think that's what has investors so jumpy and nervous, that if some of the best operators in the retail business can't figure out what's coming next from the consumer, how can you possibly anticipate where the stock's going to be in 6 months, a year from now?
Absolutely. I think that's a really good point, Becky, because we're all trying to figure out, is the consumer strong? Is the consumer weak? It doesn't seem to me like the consumer is weak. It does seem clear that retailers are worried about consumer behavior. And certainly, to your point, they're having a tough time operating, even the best in class, in this environment. So I think it's sort of key how Corey Berry lays it out in the release, the CEO of Best Buy, how she says, look, we anticipated these pressures were going to be the pressures. They were just worse than we had initially thought. Target and Walmart, of course, also experience the same thing. And those are some of the best operators in the game. So if they are having a hard time managing costs, what does that mean about the future? How are they going to do through the balance of the year? And to your point, if we don't really know what consumers are wanting at any given time, if the weather is really going to swing things so much for these retailers that are already struggling, what does that mean for the forecast and for what's already planned, especially with the supply chain that is still under so much pressure because so many of these retailers' inventories are a bit out of whack, right? They're trying to order way ahead so that they don't have a repeat of the end of 2020 and the end of or the full year of 2021. But Abercrombie's inventory up 45%.